and accounting. I hope you're having a great day. It's been a week since I filmed my last video, and I had a bit of an eye infection, so I decided to not horrify you with my ghastly appearance. But it's all going back to normal now, so that's great. So today's video, I thought I'll take a break from the usual tax stuff. To be fair, most people are forcing me to take a break because as valuable as tax videos are, there's areas we can add a lot more value through this content. So if you were following my 6-part series on how to get paid from your company, I'm just taking a little break from that. I will go back to it, but I want to make sure I've got a good balance between tax and business growth and business development stuff. So today's video, I just want to give you a bit of an overview of what a business is worth. Obviously, this is quite a complex area and there's lots of factors, but I'm going to give you a really quick overview. I'll try and keep this video under 7 minutes if I can, and well, let's aim for 5 minutes. And then what I'll do is I'll do some follow-up videos that sort of expand and explore on some of the things we're talking about. So, from a financial point of view, when you value a business, there is 3 components to it, really. Okay, so a business has its assets. So let's say you've got a premises, you've probably got shelving, you've probably got other equipment in the office that has a physical value. A business also has what you call working capital. So not just working capital, but current assets. So things like stock, other consumables that are used in delivering that product or service. But then the third one is a business essentially has goodwill. And usually there's not a lot you can do around the value of your assets or the value of your stock. You know, assuming you're running your business efficiently, then that's going to be predetermined and outside of your control to some extent, outside of your immediate control. So the one thing that you can impact is the goodwill people are willing to pay when they buy your business. So goodwill is like a whole video set on its own. But what goodwill essentially is essentially the amount of money people are willing to pay you for your brand and your connections. So there are quite a few factors that go into determining what your goodwill is worth, and also actually it's also what people are willing to pay you for the processes in your business as well. So if you've built the kind of business that is easy to run, that pretty much runs without you, that has a great team who are really committed to the business, plus you've got really, really good clients and you're not overly reliant on one client, and then on top of that you've got a really good brand and really good product with really good margins, then that's what people are going to pay for. And to put it into perspective, right, if you're Me Too kind of business, a business that doesn't really differentiate, a business that doesn't have like a USP, like a unique selling point, and doesn't have a really defined target market, it might sell for 2 times its annual profit. So let's say, you do the graph, you get your profit up to about 50K a year, then, you'll be lucky to get like 100K for that business. Obviously, you've got to factor in a few other things, like if you're, mainly if you're working in it as well, that's going to have a big impact, because a lot of the time, you've got to factor in the cost of replacing you when you're working out what the profit of your business really is, your underlying profit. But but a business that has all the other components, a good brand, a well-defined target market, good product, and a good customer base plus good processes, that can sell in certain circumstances up to 40 times its net profit. Sorry, it's adjusted profit. So what that means is, well, in general, businesses that are worth 40 times that profit tend not to have a profit of £50,000 anyway, because the processes are so good. The profit is, in the tens of millions. But there's this multiple that determines what people are willing to pay for the goodwill in your business. And that multiple is determined by quite a few things, as I mentioned. So what I'm going to do is in future videos, I'll go into the individual things that determine that multiple, and then explain how they can be improved. But just to give you an overview, so the key thing you're trying to do is when you try and sell a business, is you're trying to get as much money as you can for that goodwill. So what we've actually done is we've created a course. It's called Apex. So what we do is we support business owners to take their business from earning £50,000 a year and only being worth 50 to 100,000 to putting the processes and branding and structure in place to be actually worth £1 million when they want to sell it. Sometimes they don't want to sell it because, you know what, if your business is worth £1 million, it's probably quite a good business and it's easy enough to run without having to put loads and loads of effort into it. So just you can build a business to sell without actually having to sell it or wanting to sell it. So it's just something to factor in. So if you want to find out more about our signature program, Apex, and if you want to understand how an accountant can actually help you get your business to a point where it's worth £1 million, then get in touch and book yourself in for a free strategy session. So, and also just keep watching this video series because I'll be releasing more useful stuff on tax, more general business stuff, and more stuff about the valuation and improving the valuation of your business. So have a great day, and I will see you soon.